So we are going to start lesson number 7. I am Masuood Ahmad, your accounting teacher, and the topic of today's lecture is transaction analysis. As I have mentioned in the previous my lesson, that it is a very important lesson of your class, and you must understand. And if you has any problem, so you should watch this video again and again until you grasp the concept. So this lesson is also designed for O levels, grade 9 and 11, which and A levels as well. So AS level also can take a lot of benefit from this lesson. So was transaction analysis. We have understood in the last lessons that there are 5 heads of account, and we will be doing our analysis according to these 5 heads of accounts. Assets. First of all, we have to see that whether there is any asset involved in this transaction, and if it is so, then whether it is increases or decrease in our business. For example, if you got some you bought furniture, so your furniture is basically is coming into your business. So furniture is the asset which is being increased, and for purchasing furniture you pay off certain amount from your cash or from your bank. So bank or cash in this case is decreasing. So we have to look that in a transaction, is asset is increasing or decreasing. So this point you have to be very clear about it. So in transaction, you first of all you have to look that whether assets are involved or not, and if they are there, whether they are increasing or decreasing in your business. So here asset increases when an asset comes under the ownership of and control of the business. For example, I have already told you furniture purchased, bought furniture, and decreases when an asset drained out of the business ownership. Mean when you pay cash, you don't have control or ownership of the cash because that cash is going out of the ownership of the organization. So next, expenses. So expense increases means business consume the services or utilizes utilities. For example, paid electricity bill. If you put your worker on work, and they're by the end of month, you basically have consumed their services. So salary expense is due to you. And decreases means when the reduction in the amount previously charged. So for example, refund of overpaid rent expense. Previously we have paid more amount than it was actually to be paid. So the return is our decrease in expense. In the same way, purchases are your expense. You can treat them as your expense. When you return purchases to your credit customers, credit suppliers, so your expense is being considered being decreased. So third head of account was income. Income increases means business earned some money. For example, sales. When sales are made, commission are earned. When you give the property of business to your tenant, and rent received, rental income is your discount received, your income. And when bad debts return your money back, and that is also your income. So in case income decreases when sales are returned by credit customer to you, your income is decreasing. So we have to look on this aspect. So fourth one is your capital. Capital amount invested, as you know that amount invested by the owner is your capital. Profit made by the business, basically profit is also belong to owner. So it is also we can say that when business earn profit, mean your capital is increased, because this amount will definitely transfer to your capital account. Well, decreases mean when loss are made by the business or amount withdrawn from business by the owner, that is known as drawings. In case of company, dividend is basically the drain out of your profit out of your business, and that is basically a reduction in capital or decrease in capital. So next, see about liabilities. So liabilities increase means loan taken from bank or credit purchases made by the business. Your liabilities are increased. In case of if you have taken loan from bank loan is your liability, and you have to pay back in future. And if you bought some goods on credit basis from your credit suppliers, that means your creditor mean liability is increases. And in case and about decrease means when you paid your bank loan back to the bank, or you paid your creditors, that means the liability is decreasing. So assets can increase, decrease, expenses can increase or decrease, incomes can increase or decrease, capital increase or decrease, liabilities are increase or decrease in any transaction. So we have to look at this aspect. It is very important, boys. I am again saying this that you should understand this concept, increase or decrease. So let's see what is in the next slide. So here we can see that what combinations can a transaction can adopt. It does not mean that something is increasing and other thing, as you know that we are doing double entry bookkeeping. In double entry there are two aspect of every financial transaction, equal aspect of any financial transaction. So it does not mean that one thing is increasing and other thing is decreasing. It is not going to happen in accounting. So let's see. Possibility one is that when introduce capital by the owner, assets they increases, and at the same time your capital is also increases, because capital is your source which provides you some asset which is your resource. And in this case, when you got something from owner as a capital, on one hand your assets are increasing, and on the other hand your capital is also increases. So when you took loan from some organization or from bank, and in this case both things are increasing, your assets are increasing in your business, as well as on the other equation, on the other side of the equation, your liabilities are also increases. And when I'm discussing point 3, that is one asset increases and other asset decreases, what type of transaction it could be? When you deposit cash into your bank account, mean you are paying, you are draining out of your office the cash and putting that cash into your bank account. That is the example where one thing is increases and other thing is decreases. So in the same way, if you bought some assets by cash, your asset will increase, and at the same time your asset mean cash or bank is decreases. So if we look at the case 4 possibility, and what is it? When you paid some expenses for cash, in this case your expenses increases mean it wasn't in your books, now it is appearing in your books, and the value of expense increases in your books of accounts, and your asset cash is decreases. In this case, if you charge some depreciation, so your expenses increases, and the second effect is your accumulated or provision for depreciation is that is contra asset is increases. So we will discuss this in upcoming lectures. It is a full-fledged depreciation or of non-current asset is a full-fledged topic, and we will discuss it inshallah in coming slides. So fifth example, we can say that when expenses are accrued or there is an adjustment. So expense, as I have told you a few minutes ago, that few minutes back I have told you that you put the workers on work till the end of month, but you haven't paid it yet. So for that particular month your expense is incurred, so you have received services but you haven't paid. And in one aspect of this transaction is this, that your expense will increase on your books, and at the same time your liabilities also increases. When you after few days, when you pay off that liability, your liability will decrease and your asset will increase. So sixth case here is liability decreases and assets decreases as well. So how it comes? That when you pay off your loan, so loan, when you paid, loan was your liability, when you pay off it will decrease, and in the same transaction your asset, your bank is also decreases. So let's discuss point number 7, that is income increases or your asset, at the same time your asset will increase in the same transaction. How it comes? That when you sold goods to your customer on credit, so you haven't received, or if you sold it for cash, so you received your cash, and cash will increase and your income is also increased. Sale was not recorded. When you made sale, you have to record somewhere that I have sold articles or goods for cash or on credit. So your income will increase in this case. If you receive rent from your tenant, so your rental income will comes into your business, and on the other aspect is that you receive cash or a check which will be deposited in your bank account. So bank will increase, and at the same time your income will increase. So point 8 is when income decreases as well as your assets decreases, means when your debtors return sales return to you, return, that is basically return inward, because return is coming towards us, and it is also known as return inward. When your customer returned goods, so customer was previously your account receivable, that is your asset. Now asset will decrease, he will not going to pay you back that money because he has returned the goods, and at the same time when you sold that goods, you put them on your income side. You showed that income is increased. Now the income is decreasing, in this case sales return. Or when the owner of the business, that is basically right opposite of the first transaction, introduce capital, and basically it is drained out. When capital is drained out by in the shape of drawings made by the owner, so your asset is decreasing and your capital also decreasing. There are so many other combinations can be formulated, but keep this thing in your mind that each and every financial transaction has two aspects. Okay, two aspects. We have to analyze, we have to find out the asset in the transaction, what accounts are involved in it, and whether they are increasing or decreasing. Okay, so boys, here is a tabulated form of a transaction. I am going to write transaction over here. For example, when business started with cash 5,000, furniture 2,000, and motor vehicle 3,000, mean the owner is putting these things into your business, and being a bookkeeper, being an accountant, we have to record the transaction. So another very important aspect is this, that when you are studying accounting, or you are dealing with books of accounts, please make this thing in your mind clear, that you are an accountant, you are a bookkeeper, you are business. Okay, when you think this point, when you keep this point in your mind, then everything will be clear in your mind. So once again, when you are studying accounting, or when you are dealing with books of accounts, consider yourself as an accountant of that business. When you are sitting in your exam, when question is in front of you, the business in the question which was mentioned, that business is yours. You have to be the accountant of that, and then you solve that question. Okay, it's very important point, boys. So here in this case, cash, that is asset. Okay, furniture is asset, and vehicle is asset. When you receive from owner these things, mean business receives these things, and all the things are assets, and they are increasing. So assets increases in this case, and all these assets come from owner, mean the other aspect. What is the source of these assets? That is capital. So capital also increases in this case. Amount you can easily calculate, that is okay, so that is 10,000. So next transaction is, guess what it could be. So here is increase in computer and decrease in cash. What happened in this transaction? So what is the transaction? What it could be? That computer is increase and cash is decrease. Mean computer, I guess you bought for computer by paying cash. Is it so? See, that bought office computer for 2,200 in cash. Okay, and if it was bought on credit, what it could be? If your office computer is bought 200 from a shopkeeper on credit, so that shopkeeper will turn into your liability increases, and your asset increases. Let's see the third point. Okay, so here cash decreases and rent expense increases. What happened? See, you have paid, business has paid rent for the month 3,000 in cash, and what fourth looks like, that bank is increases and your cash is decreases. So cash is draining out of your business into your own bank account, mean office business bank account. So bank is increasing this open bank business bank account by depositing $1,000 in cash. And boys, what about fifth? So here in fifth, bank is increase in business, so you got money in your bank account, and here liabilities also increases, so you have, I guess, taken bank loan. See, what is it? Yeah, we're right. So here is your assignments, boy, and 1 2 3 4 5 6 and 7 transaction, and first is I have done for you here, and you have to solve this this assignment, and in the given table, and the table is on the next slide, I will show, and you have to take a pic of it and send to my WhatsApp number. Okay, here is the table. So just you have to tell asset is increases or decreases in this case, or income or expenses. These five heads of account you have to answer increase or decrease. So let's recap all the discussion here. So assets increases, assets come into the business, or for example bought furniture, and decrease mean when an asset drained out of the business. Expenses increases, consume the services or utility, and decrease, reduction in the amount previously charged. Income increases, earns some money, and decreases, sales return or by the customer. Or capital increases mean amount invested by the owner, or more amount invested in the owner by the owner into the business, or if he takes out the drawings or dividend in the case of company, that capital decreases or equity decreases. Here is last thing, that is liability increases, mean you have taken bank loan, you have bought on credit, or you haven't paid the expenses, accrued expenses. These are also liabilities. And if you take income in advance, if you got subscription in advance, that is also your liabilities, boys. And decreases loan mean your when you paid loan back, that is your liability decreases in this case. So that was all. I have already showed this slide to you. Okay, that is the detailed discussion we have made earlier. You can have a look of it for a few seconds, then I will move to the next slide. So possibilities are there: 1 2 3 4 5 6 7 8 9, and there are so many others. So in each possibility you can see that one thing, there are two aspects in every transaction, and they are, one is increasing, other one is also increasing, one is decreasing, other one also decreasing, one is increasing, other one is decreasing, one is decreasing, other one is increasing. So there are so many combination of all this. So boys, that is your second assignment from book, and chapter number 1 you have to see the page 8 over here and review question number 4. So both of the assignment you have to fill and send it to me. Okay, till then, okay boys. And the next lesson would be about your rules of debit and credit, and it is also the third most important chapter of your topic of your course. Okay, till then, okay boys, Allah Hafiz.